investors and traders. Today I'll speak about 3 dividend stock, dividend investing, and 3 stock that now I buying in this month. So let's start with the first one. It's Verizon. It's a communication service company, telecommunication. So let's firstly look at the chart. Now it's trading at the level of $40. We seeing here a range between 40 and $60. Now we trade at the lower border of this range, and actually we are trading at the levels of 2020 and 12. So now I think it's a nice opportunity to buy the stock. Also, let's have a look on it. Fundamental parameters. We can see that the dividend yield is more than 6%, market cap 168, so it's quite big company, and the P ratio is less than 10. So the average P ratio of S&P 500 index is 15, so it's twice cheaper than most companies in the index. Also here we can see that the revenue of this company is quite stable. Every quarter the company usually earns more than 33 billion bucks. The net income of this company also increasing. It's 5 billion, 6 billion, and that's the reason that we see the net profit margin also increasing quarter to quarter. We see 13%, 15, 14, and the last quarter the company show a nice profit margin of 18%, so it's quite impressive. The payout ratio about 50. It means that half of the company earns the net income the company paying as a dividend to its shareholders. So here there is a place for the company even to increase it dividend payments. Also, let's have a look on the marginality. Yes, here we have it's a quarterly data. So what we are looking here, we see that the margin is quite stable. Last I guess 8 quarters we see that the net margin is higher than 30%. So any quarter of loss or something like this, a very stable company, and the gross margin is also higher than 40%. So any problems with the marginality for this company. The dividend yield, let me check here. So the last 5 year it's stable about 4%. Now it's a little bit lower. Yeah, so we see the last because the price of the stock is decreasing, the dividend yield is increasing, so it can be also very nice for the dividend investors, dividend stock pickers. And let me check the expectation on the yearly basis. So 5 billion, about 5, so quite stable. The EPS, earning per share, and let me check the revenue. It was 136 billion last year, and the future year expected actually to be at the same level. So as I said previously, it's a very stable company, very stable marginality, and of course the revenue is also very predictable for this company. Let me check the PS ratio, price per share. The last data is about 1.2, so actually we see it's much cheaper than the last years. It was about 2, 1.6, 1.4. Now it's only 1.2 the price per share valuation. So now it's also can be the one argument to at least consider the stock, to maybe to watch, maybe to add to your portfolio. The ticker of this stock is VZ, $40, and dividend yield of course more than 6%. So Verizon Communications, it was the first stock for today. The next stock for today, Philip Morris. It's a consumer durables company, a tobacco company. From the chart, I guess here it was an impulse. The first wave, the second, the third is usually the largest wave in the impulse, and the fifth here, I guess it's the impulse that finished, and Here we are seeing we saw a correction, ABC, clean ABC move, and now we are most probably getting out this. No, the correction is finished, and now I'm expecting this stock to grow. By the way, usually the correction finishing at the fourth wave of the previous impulse. So here, it's the probability of these waves is elevated. Let's have a look on the fundamental parameters of the Philip Morris. So here the dividend yield 5%, the market cap is actually the same as Verizon, and the PE is 17, a little bit higher than Verizon, but anyway 16, I think it's quite nice. About the revenue, I see it's quite stable, about 8 billion bucks per quarter, and marginality, look, it was 30, 26, and the last data about 30%. Yeah, very impressive marginality. By the way, it's like IT company like Google or Amazon. No, Amazon is very low, and net income margin has, but like Google, maybe Meta, so very high marginal, high efficiency of this company. So of course the company pays dividend, the payout ratio 86, it's quite high, but anyway I think it's enough to for the investors not to worry about their dividends. And also let's have a look on the marginality, the profitability ratios. The EBITDA ratio is about 40 last quarters, and the net margin, yeah, is very stable, about 30%. So as Verizon, it's very stable business, very highly predictable. The dividends, look, it was 4.5, 4, 6, 5, 6, and now it's about 5%. So also we see that the dividend yield is is very high and highly predictable. The company pays dividends quarterly, and let me check the expectations. The P is the P ratio, yeah. Yeah, earning per share 6 and 7. Yeah, the EPS will grow, so it's the net income of this company expected to grow. So actually the dividend payment most probably also the company can increase its dividend payments, and the revenue also. We saw last year it earned 30 billion bucks, for this year 33, 24 is 35, and then about 38 billion bucks expected 2 years from now. So Philip Morris, I personally hold this stock in my portfolio, highly predictable business. The IQOS, the cigarettes, I guess also the Marlboro, it's all the in the portfolio of Philip Morris. So I'm personally hold this stock in my portfolio, 5% dividend yield. I think it's very nice. So Philip Morris is the second stock for today. And let's move for the last stock for today. It's McDonald's, MACD ticker. So here, look, I think we're moving in a increasing channel since 2020. Now we're in the middle, trading in the middle level of this range. And also their side, the momentum indicator about 15, so it's not telling we're going to raise or we're going to decrease, but anyway we have a nice dividend yield, more than 2%. And also let's check it fundamental parameters. That's one of the reason why I'm like this stock so much. So the revenue is quite stable, we see, and the marginality, look at the last 3 quarters. We saw the net profit margin 21%, then 33%, and now 32%. So really I think it's the most highly marginal and highly efficient company today. It's higher than Verizon, higher than Philip Morris. By the way, if you look, the market cap is also the biggest from the whole 3 companies. So McDonald's, its marginality, it's quite impressive. The P ratio 30, so it's quite high now, but we see a very stable business. The payout 67, and let me check the dividends. So it was 2%, 2%, 2. So all the last years the company pays stable stable dividends, and of course the expectations. Look, it reported 10 billion bucks of EPS. No, it's earning per share, sorry. Earning per share was 10, then expected to 10.6, and then 11 and 14. So very aggressive expectations here, very positive. And the revenue also expected to grow. It was last year it was 23 billion, then 24, and most probably it will get to 30 billion bucks in 3 years from now. So very good expectations for McDonald. Nice dividend. So McDonald was the last talk for today. If you like dividend investing, if you like passive income dividends, so please press the like button. Don't forget to subscribe to my channel, and of course see you on the next time. Bye.